What have precious metals done during 2024? What is the outlook for them during 2025? In this quick video, we will review both the technical picture and the fundamental picture and try to explain the difference between the two. Let's start with the numbers. Gold has ended 2024 with a 27.2% gain, and silver with a 21% gain. These are not bad numbers. As a matter of fact, in the past year, both gold and silver have broken out from a prolonged period of consolidation, and these are the best annual returns we've seen since 2020. And yet the sentiment regarding precious metals is extremely negative right now. People are feeling frustrated, mainly because they are comparing gold and silver to other asset classes, such as the stock market or Bitcoin. The S&P 500 closed this year with a 24% gain, and the Nasdaq 100 with a 26% gain. So gold has slightly outperformed them both. But they all pale in comparison to Bitcoin, which had a stellar year with a 220% gain. But I think that this is not a fair comparison. Both the stock market and Bitcoin are risk assets, whereas gold and silver are safe haven assets. There is very little risk associated with holding physical gold and silver, and if you take that into account, they are doing pretty well. Since the election of Donald Trump, we've seen a surge in optimism. The public is under the impression that we are headed towards a period of growth and that inflation is over. As a result, they feel that they no longer need to protect themselves with gold and silver. But I'm afraid that this is a false hope. There are strong indications that the United States will be entering a recession sometime in the first half of 2025. I've spoken about it at length in my video Brace for Impact, and if you haven't seen it yet, I recommend that you check it out. On top of that, inflation is probably here to stay. History shows that inflation is a long-term phenomenon, and that once it erupts, it is very difficult to defeat. In the past 2 years, it has indeed subsided, but if the Federal Reserve is going to start easing again, in an attempt to deal with the coming recession, we should expect another wave of inflation. Therefore, the need for precious metals has never gone away, and I'm afraid that people will have to learn this the hard way. Now let's look at the charts. I would say that the technical picture for gold is unclear. On the daily time frame, gold is looking fine. Right now, it is holding on to its short-term rising trend line, which began in March last year. If it manages to break out of the pennant formation, which started right after the election, it could actually rally from here. However, if it breaks down, I'm afraid that it has a long way to fall. On the weekly chart, we can see that the next line of support is at roughly $2,500 an ounce. And if that doesn't hold, gold can fall as low as $2,100 an ounce. This could happen during the initial stages of a recession. But if it does, I expect it to be short-lived. As we've seen in the past, the moment that the Federal Reserve starts printing again, gold tends to rebound rather quickly. Silver, I'm afraid, continues to underperform gold. It has recently broken down from its short-term trend line, and as a result, we should expect it to retreat to a lower trend line, which is currently at $25 an ounce. The only saving grace is that silver probably has some strong horizontal support in the area between $28 and $30 an ounce. If this horizontal support manages to hold, then perhaps what we're seeing here is a false breakdown. Now, if we were only looking at the charts, we would perhaps be persuaded to sell all of our gold and silver. But luckily, we've already realized by now that technical analysis can sometimes be misleading, and that we must also take into account the fundamental picture. And from a fundamental point of view, the outlook for precious metals couldn't be brighter. In the coming years, I expect the US to experience stagflation, that lethal combination of inflation and stagnation, just like we've seen during the 1970s. Due to the recession, the stock market is expected to tread water, and due to inflation, bonds are expected to perform very badly. Therefore, the best performing asset in such an environment is precious metals. On top of that, we have a structural deficit in silver. According to the data from the Silver Institute, during 2024, there was a physical deficit of 215 million ounces. And if we include the ETPs, the deficit grows to 265 million. This is not a temporary phenomenon. We've had physical deficits for 4 years in a row. And if we include the ETPs, 6 years in a row. If we add these deficits together, they amount to more than 1 billion ounces. Right now, these deficits are met with supply from existing above-ground inventories. But once these inventories run out, or once the owners of that silver decide that they no longer want to sell it, we will have a shortage of silver. And I fail to see how the price can remain stagnant when the underlying asset is simply not there. Why do we call this a structural deficit? Because it cannot easily be resolved. Over 70% of the mine supply of silver comes as a byproduct of the mining of other metals, such as copper, lead, zinc, and gold. This means that the supply is not price sensitive. Even if the price of silver doubles, the supply is not going to increase substantially, because it is just a small component in the cost-benefit analysis of these mines. For decades, this fact made it easier for the large banks to keep the price of silver subdued. The supply kept coming, no matter how hard they pushed the price down. But it could also work the other way around. With enough investment demand, silver can enter a prolonged state of shortage. So why are the prices of the metals not moving? We can try to rationalize it in a number of ways. As I've already mentioned, this could be the result of the optimism regarding the election of Donald Trump. But it could also be due to a falling industrial demand, which is associated with a weakening economy. Another reason could be the enthusiasm regarding Bitcoin and other cryptocurrencies, which is drawing capital away from precious metals. But ultimately, I believe that gold and silver are not getting the attention that they deserve because people are unable to think rationally right now. The events of the past few years, beginning with the C-19 lockdowns, the inflation, the rampant speculation on Wall Street, and the extreme polarization of the political system have messed with their heads. Humanity has lost the ability to tell the difference between valuable commodities and worthless meme coins. It would take a global financial crisis for it to reevaluate its priorities. And as it turns, this crisis is probably right around the corner. So please stay strong. Please stay the course. If you've held on to your gold and silver thus far, don't give up on them now. Trust your instincts that the tried and tested hedges against inflation will do their job once again. Thank you for listening to the Silver Hermit podcast. If you like this content, please donate in the link which appears in the description below. Please subscribe to this channel and share it with your friends and family. Hit the bell icon to be notified whenever I release a new video. Remember, I'm not a licensed financial advisor. This video is intended for general informational purposes only and should not be regarded as investment advice. Before taking any investment decision, please consult with a professional financial advisor who may assess your personal investment objectives and needs.